The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Tiger Technicians Hour. This is the 10th of September. This is the day we've been waiting for. This is the day that we spend an hour discussing, looking, verifying, explaining, articulating thoughts on the VIX index. What an appropriate day to do it. That's tonight at 6 o'clock. Well, it might not be tonight in your land, but it'll be 6 p.m. Eastern Time. Free webinar. Let me go to this right here. Historical context of volatile markets, a live event. Get a 30-day free trial to Basil Chapman's daily newsletter, the opening call, and attend the special live 60-minute webinar taking place Thursday, September the 10th at 6 p.m. Eastern Time. Learn more, and you can go and find out all about it. But in fact, it also happens to coincide with a fabulous promotional going on at TFNN, which is the Tiger Dollars. So try to put that package together, and it's really special. So go to the front page, check it out, and I hope to see you tonight. I know people have been signing up, and I think that's, to me, it's really an important moment. Why? Because we have a candle that I will talk about in the monthly chart that is going to be so important to generating a sell mode in the monthly charts, or to hold in the sell signal area a little while longer. So all of this is very important, and as I say, check out the front page of TFNN. I think you might enjoy it. Earlier on, yesterday I was doing Larry's show at 9 o'clock in the morning, and I showed this chart right here, and I said, this is very important because the pattern I'm looking at says that there's probably a failure being made at peak C to make a peak C minus, and that if the S&P 10-minute chart, E-mini, September E-mini breaks underneath 1982.25, the low that was made at 7 o'clock, that would portend even lower prices. Well, lower prices. Not only did we plunge, went all the way down to 1993 in the S&P. That's 1993 from the 1990s, 1980s that's huge. Plummeted and came right back to ABCD. I spoke about the Chapman wave methodology. This is what we look for: sharp decline, and then you look for the lowest, most identifiable low to go A, B, C, D. And at D, you've got to be careful. It could go higher, but that's where you really have to be careful. Hey, peak D, you've got to be careful. Look at that peak D this morning. At 6 a.m., the spike goes 1967. Hey, that is 1967. That is, in fact, a very big move overnight. And the Chapman wave trend gauge suggested that there will be a very sharp move in the S&P futures, could come from lower down. And it didn't have to, but it should impact the S&P cash. Well, we've seen that has happened. So I discussed this morning during Larry's show that there was a pattern I look at, which is the Eiffel Tower, straight up, straight down. And that if that was to occur, you could get a one-to-one to the downside. And that's what we got. Well, when I came on the show, no, that happened before Larry's show. When I came on the show, we were down here in the 1930, I think it was 33 area, 34. And I drew a yellow circle and I said, I think we've made, excuse me, I think we've made the low of the day. No, we've made the low of this particular period, and that we should go back. And one of the reasons why I said that was in the Chapman wave arch formation, if you take out the left side low, in this case, 1993, I better fix that voice up after all. I'm going to be doing a lot of talking today. Got it. Okay. So when you test that left side low in an arch or inverted V formation, the bar that takes it out also has to be that comes right back, closes above the left side low, and within another bar or two starts to move higher towards the next level of resistance. Usually it's a 9-period moving average. It could be a previous peak. Whatever it is, doesn't matter. Look what happened. It went moving up straight away, It went all the way from 1928.50 to 1946.75. Peak A, pulls back, and then I drew in just before the end of the show of my Larry's show. I drew in these this left side, right side price time match, because you get the A. What's the opposite of an A? Y. It is a V. And what does a V do? It tries to go back to a very important previous level of resistance. And in this particular case, I should make it green, right? In this particular case, color green, that's what we're looking at. So the sine wave is such a familiar pattern, going up, finding a fulcrum in the middle, and then rallying back again. So what we're looking at in this particular instance is that in the left side, right side price time match, it said that by 10:30, the 19, what was that high? 1949 level should be reached. And what happened is we went to 1949 one bar later. So that's the V-shaped pattern. Now we've extended that, we've gone right through the resistance, and this becomes a different formation altogether. We have to use other techniques to find out what can happen. You've got support in 1946 on the 10-minute chart of the E-mini, September E-mini. If that gets taken out, we might have seen the high for the day at 1955.75. The 200-period moving average has been very important. It's at 1951. A break above 1951 says we should go to a C and a D on the upside. But I'm going to put this away for now. I just wanted to show you some of the techniques. Now, the techniques were below, and I had a question about the 30-minute chart. Someone wanted to see if they've notated in the Chapman wave correctly. We made a low, in this particular instance, the doji low at 7 o'clock at 1933. That's the one we're talking about. And in the 30-minute chart, you went not to a D or an E, you went to a peak F, reversed at that trend line resistance, pulled back, took out the low, and now you're bouncing back. And this is the period that is, look at the stochastic MACD, we're right in the indecision, kind of building strength or going to see fading weakness. Same parameters. Okay, let's get out of that and we go on to the story of the market. The Dow is up 63. Let me do the charts at the same time. INDU. So the Dow is the M pattern that we were looking at as formed. We were fortunate enough, I think we were fortunate enough, to be able to short the Dow right at the top, the opening yesterday. And this is a position that at first you have no choice but to put in some kind of strict parameters. And you have to really think, is this a core position? Is this a starter position? What is the position? As I've treated it now, I would like it to become a core position. If 1992, oh, this is the E-mini. Sorry, let me go to the Dow. I said I'd go to the Dow. Instead I hit the wrong chart. The Dow, that was the high that was made right there at the open at 16,000. Actually, we got it even higher than that. So it was, the high was 16,664, and we went short pretty much just below that. Now, this is the issue. The issue is that the trends in the weekly and the monthly, I'll be talking about that monthly candle, the Roman candle, Chapman wave Roman candle tonight in great detail. But most importantly, the patterns that I'm looking at is that M formation that could create a larger H formation. But what it says is that the choppiness after that incredible sell-off Monday a week ago, where the Dow went to 15,375 on the 24th of August and then rallied back and made that Chapman wave Roman candle. I didn't type it in here, I'll do it now. Chapman wave Roman, why do I call it a Chapman wave Roman candle? Because it's something I discovered years ago, and I've used it, we've used it very successfully, and there's a whole panoply of events that need to take place with this candle for it, at the lows what happens, and at highs what happens. And that's what we will discuss tonight. So the Dow's at 42, having spiked earlier almost 100 points, and now and gone down quite sharply. So now what I'm looking at is this. The M pattern you can see much clearer right here in the 120-minute chart. Did it go to new high? 16,664. Yesterday's high was 16,666. So we've got a kind of a double top there. And what happens in this kind of pattern is that you start to trade in a rectangle formation until you take out a decisive low. In this case, 15,979. A close underneath that pattern is finished, it can go deeper and then start yet another arch. But these arch formations can continue longer than your patience. Consider them almost like rectangle formations. Look at this, like that. And they can keep going for a while and be very frustrating. At some point, whoosh, it breaks 16,000, closes there at least 2 out of 3 days, and bam, we start to go down towards the low 15,371 area. S&P, SPX.X. The S&P is at 1946 up 4. This is an even deeper M pattern. The weekly chart is really not very pretty, and the monthly chart suggests that having gone below the midpoint of that wick, this is really an important phase for the S&P. That's the reason why we wanted to go short the market, and we've added to that today. Meantime, back at the ranch, parameters to watch near term, I would say that at 1946 up 4, 1952, a close above 1952, 1954 resistance at any point today would be positive and say, yes, now we can go a little further to the upside. A close below 1939 to 1937 would say, uh-oh, forget it, baby. This is in real trouble. Let's go to the QQQs. The composite index, meantime, is at 20, it's up 23 at 47.79. Now, the QQQ is holding much better. A weekly chart is way better than the others. And at this particular point, I would suggest that it's being helped a little bit by the IBB. That's the NASDAQ Biotech. It's been helped by a couple of individual stocks. But the pattern says, I am going to look at you very closely, because if the QQQ breaks 100.60, let's call it 100, it's at 104.45. If it closes under 100 at any point, it's decisively made a pattern that says lower highs and lower lows coming to you, and they're coming to you in September, by mid-September. Okay? And the upside says a break into the 107.30, and we've got a larger arch formation as a single sector has a little bit more strength than the others. IWM, not that good. Way down at the bottom, the monthly chart is really what I'm looking at, because at 114.62 up 50 cents, you just need to see a break of 111.60, the low of the 1st of September, and there's a real good chance you're going to be testing in the area of 108.26, the low, and that would start to negate any little bit of strength you see in the weekly chart in the IWM, the Russell 2000. Let's look at gold. Gold is GC. Gold is up 650 at 1108. Yep, it's the same pattern we've been looking at. Rally failures, rally failures, rally failures, until such time as we start to test the, it's at 1108. A break of 1080. I wouldn't be surprised if this little trend line that I'm looking at right now creates even more little bursts of strength. That means on a short-term basis, 1123 is 1123. On a short-term basis, 1093, 1093 is really important. And most importantly, I go to the VIX right now, because that's what we're going to talk about tonight. Look at that pattern. Oh, I'm going to talk about this. This is so important. Be back straight off.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour. Now the Dow is up a whopping 12 points. S&P is up 2. I'm going to mention something here. Hopefully, I'll remember to talk about it tonight. If one can recognize the tide, if you can identify that the tide is either, it depends on your time frame, but if you, in your time frame that you're trading, if you can identify that the tide is either moving in or moving out. If it's coming in, you have a piece of driftwood and you throw that driftwood out, it's liable to keep being pushed out. If it's coming in, if you throw driftwood out, it'll keep coming back to the shore. If the tide is going out, you throw the driftwood out, it's going to keep going away from the shore. And that implies that if you get one of those Granville major sell-offs that says 90% of stocks are going to go 90 or 95% of stocks are going to go down, then you could use any technique you want. But if you don't identify the tide, then you're culpable of committing harikari there, because unless you're a real short-term trader, the tide will always save you. If you are short and the market is going down, but you get in incorrectly, there's a good chance you'll be saved because the tide is going down and it'll take down whatever issue that you have short, take it down with as well. But if you are short and the tide is going up, that's a big mistake. So I always say this in webinars and whatever I do. If you can identify the tide and you're correct in the tide, the majority of stocks and indexes will go with that tide, number one. That's if they aren't counter trend. In other words, bonds are probably going to go higher if the market keeps going low. That's just kind of the way it is. And the rates will come down. So it has to be in the sector that is in unison with the tide. That would imply that you could use any technique you wanted. You could use Chapman wave. You could use volume. You could use anything you want. Because if 90% of stocks are going to go down, you're going to be right. You could wake up in the morning and say, oh, I woke up on the left side. That means that the market's going down. You're right. And if you wake up on the right side and you say the market's going up, you might be right for just a short while, but the tide says you're wrong. So it doesn't matter what technique you have. The most important thing in these larger moves is to be able to get the tide. That's why I'm going to spend some time tonight on the candle, the monthly candle of the Dow and the S&P and the QQQ series. I'm going to spend some time on the monthly candle of the VIX. And I'm going to show you something that's very unusual. And I spoke about it during Larry's show. Look how many times in the VIX index, not once, not twice, not 3 times, not 4 times, not 5 or 6 times, but look how many times you've gone from a major thrust, let's call it above the 200-period moving average, that goldish line right there. You've gone up on 12/6, that was June of 2012. Kaplop, it comes down within 1 bar, breaks underneath. 12/12, December of 2013, pop to 23, kaplop, it goes back down. June of 2013, pop to 2191, peak D, and then it smashes to the downside. October 2000, etc., etc., etc. So wait a minute. Why would this be different? That's what I'll be discussing. And what can you do, let's call it to protect yourself? What can you do to at least isolate yourself from the worries of having a portfolio and say something like your IRA or whatever it is that you don't like to touch because you've always put money in it? What are the things to do? How can you perhaps ameliorate some of the damage if the market is going to go down, say another, let's just make it another 8% from here? What can you do? What if it's worse? What if the monthly candle is saying, hey, you remember that candle from November of 2007? I was just the first of the Chapman wave Roman candles. I went down for 50%, more than 50%. So we're going to talk about that. Why is this a little bit different? I'll talk about the Elliott wave. I'm going to talk about this particular pattern right here, right in this little rectangle right there. What about it? Where are we in the Elliott wave? Now, I use Elliott wave only occasionally, only when it absolutely fits with the Chapman wave. I prefer to have the Chapman wave dictate to me more about Elliott wave than Elliott wave does in Chapman wave. In fact, I hardly ever do it the other way around. But it's not to say there isn't anything wrong with Elliott wave. It's just to say that, hey, that's, you've got your methodology. Don't be interrupted by other things. You can add some of the positives, but don't get carried away. So remember, the webinar tonight, The Historical Context of Volatile Markets by Basil Chapman, author of The Opening Call at TFNN.com. Free webinar for subscribers Thursday, September the 10th of 2015 at 6 p.m. And you get 30 days free of my newsletter. I think that's a deal. I think it's worth just pursuing. I'll be right back. Dow's up 30, S&P's up 30.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. The TFNN End of Summer Tiger Dollar Sale is here. We've just announced our best Tiger Dollar sale is back for 5 days only. This week, you can get up to a 40% bonus on whatever you spend when you purchase Tiger Dollars. Tiger Dollars are the best way to lock in added value and extra savings for any of your TFNN products or services. Normally, we only offer a 10, 15, or 20% bonus, but for this week only, we've doubled all our bonuses and are giving away 20, 30, and even 40% bonuses on all Tiger Dollar purchases. Tiger Dollars can be used for any TFNN product or service and never expire. So whether you're a subscriber already or planning on trying out a product soon, now is a perfect time to get your Tiger Dollars. For more information and to purchase your Tiger Dollars today, visit the front page of TFNN.com for all the details. Remember, this sale ends Sunday, so act now and don't miss out.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Let's do a couple of things here. Dow's up 44, S&P's up 6. So I was asked about the IBBs. This is a good time to maybe short right here. And what I had said was, we are short my opening call away from up at 393.10, and we've kept that as a core position. We wanted to add, and in some ways we've done something like that today. But most importantly, sitting on the 9-period moving average, the IBB at 347.67 up 3.45 has a MACD that is rallying. And the stochastic did cross positive, and the histogram, look at this little histogram here, it is positive. It's up 1.34, I think. Most importantly, the price is not moving commensurate with the power of the technicals, and the on-balance volume and the relative strength are still very flat. So my thing here is that it is usurping much needed energy and going nowhere. It's like spinning your wheels in ice or on quicksand. The wheels spin and the engine looks like it should be going. The RPMs are up there, but the car's standing still. Or it's moving very, very slowly. And that means that when all that power stops, you could subside lower. So I'm looking at this and I'm saying, no, look at the M pattern, the H to lowercase h to lowercase m. It says, yeah, there could be one sudden spiral to the 120-minute chart from 347s to 361. It's a possibility if that energy suddenly kicks in, if the Dow suddenly closes up today back in the plus 90, S&P plus 9 area, then that IBB will certainly push a little bit higher. It'll go to probably 349. But if it goes into 353s, then you can expect 350, 354 area then the IBB could, in fact, have that sudden spike. So my recommendation was, this is someone who has a much longer term perspective. I would say you could nibble here. Yes, it's not the ideal place, but yes, you could nibble. Ideal was at the opening yesterday. I had that as the entry point. I blipped it. I took it off at the last minute of my newsletter. I don't know why. I promised I would never do that when you've been thinking it through. Don't suddenly change your mind at the last minute, but I did. And it was a perfect entry point for risk reward. It is in leg C, probably peak C, but this is where you get C minuses. This is where you get the failures. So I'm just suggesting nibble here, but if there's a sudden spike up, that area in the 359, 361 area, that's really where the perfect replacement of getting back in, because that would be leg D. I got a feeling it's not going to make that D, but that's just a feeling. We'll see what happens. So that's my recommendation. If you want, you can nibble here, looking at the bigger picture, almost as if you're buying a put. Remember we spoke, can't remember who we spoke with last week, who said, yep, buy a put in the IBB right now, because that allows you for the fluctuations and everything. But if it's a put where you're expecting it to go much lower in October or so, that's perfect. So, okay, that's perspective. Now, I also mentioned I quickly went to my my talk for tonight, and I quickly typed in speed. I'm going to be talking about speed. Actually, it's something I kept thinking about all the time, and why I completely forgot to talk about it as a separate thing. Well, these things happen. So thank goodness I suddenly said, wait a minute, we saw that quick move today. Speed is of the essence in the VIX index in certain circumstances, and I want you to learn how to read what's happening when there are sudden spikes in volatility, because we've seen many times over the past 2-3 months where the market tanked, literally tanked, and the VIX index didn't go anywhere. And that's something that you have to deal with. You've got to try to understand when the fund managers, the hedge funds and the fund managers and the professionals are saying, uh-oh, I really need to get some insurance. That's when the volatility index. So it's so interesting, because sometimes you've got this whole mathematical formula and all that stuff on the futures and but in fact, all that happens is that fund managers suddenly say, hey, the market's not going the way I want. I have to buy futures, and then they all pile in. That's when you see the VIX often explode. So sometimes the VIX can explode to the upside, but most of the work to the downside of the market has been done. It just needs this, like Monday a week ago was a little bit overdone, but that was just one of the things. So that spike to the 53 level in the VIX index, very unusual to break the 20s. You saw many times under serious conditions, you went to the 20s and then failed. So that's what's saying to me, this is not crash material. This is down, 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 lower lows and lower highs, but it's like water torch. It's just like drip, drip, drip. That's really what we're looking at. Okay, I hope I made myself clear. Now, I want you to do this. I want to grab this particular, so that's the 30-minute chart right there. No, I didn't need that. That was a mistake. ECU 5, okay, that's the one there. I want you to just grab this 10-minute chart. Remember I said it was a moment of indecision? So the E-minis go down a little bit more, and now look how it's coming back. So you've gone through one iteration of the Chapman wave, left side, right side, and now, wow, look at this. Look at the spike to the upside. There's that 1951 200-period moving average that I was speaking about. That's the resistance. If it closes above that 52, 53, there's a real good chance we can have a big rally going all the way above that 1955, 75, 11 o'clock high in the E-mini, the 10-minute. So I love to do these where the patterns repeat, the A, the V, or the cup, and the arch, the single leg up that fails, giving you that Eiffel Tower straight up, straight down. I love these, love these, love these. Okay, let's go back to the market. IYT. What is the IYT? It is the transportation index, which is up at 1.91. This is the iShares of the transportation index. It's in leg C. Today it made a leg C. Another reason why my suggestion was that you keep your eye on the ball, because that rectangle formation trading range could be really frustrating for both bulls and bears. So the timing is on the outside of the perimeters. That's when you want to get your positions. So the new positions that we got this morning, I don't think that they were necessarily ideal, not at all ideal, but they were way better than just grabbing them. We waited patiently for them to come to us, and that's the best way to do it. Now let's go to this IYT. Let me show you something. One trend line can make a huge difference. One trend line becomes a focal point. Look at this. Where would I draw the trend line? My eye says, I spy with my little eye. I love playing that with the grandkids. There we go. You go all the way down to there. And that says that the IYT daily chart could have strong resistance. It's at 144.82. Strong, depends when it comes in. But strong resistance in this area right here today, it would be 146.10. Tomorrow it's a tad lower. It's at 145.88. And that's going to be something I'll watch. Look at this. There are. This is the 120-minute chart. Now the 120-minute chart, based on the technicals, is saying, you know what? That I'm going to call not an F/C, but a C. And I'm going to, a B. A B. It is an F/B. But this is not a G/C. I'm just going to call it a C. Why? I'm anticipating that the IYT actually tries for the 200-period moving average of 146.26. That'll take it right to that area of resistance, that trend line resistance. Where did I take the trend line from? The high that was made at 153.05 on a daily chart on the 5th of August. The high that was made, it's actually the candle, the high that was made on the 17th of August at 150.57, and then the candle, the open of 150.44, just a little bit below the 150.57, and that comes in right there. So I've had it 1, 2, 3, and then that candle, look, that candle, that high was right on the line at 150.21. So this is, for me, a very legitimate. I'm going to make it thicker, I'm going to make it darker, just to show you. That's what I would call a good way, a very easy way of giving yourself parameters and saying that's a trend line that's very important. Okay, make it simple. And look at the trend line support on the IYT. Now, the IYT was a forebearer of the news that said, watch out, market, because I've been plunging. And I've gone all the way from the 167 area into the 129s, 128, I think. What was the low? 128.26. Wow, right there, 128.26. And now I'm having a bit of a bounce. I deserve a bounce. After all, I was the foreteller of the weakness in the market, and now I'm saying this is the bounce. And I've already started the bounce and done very nicely. I'm in leg C. And the MACD is improving. And stochastics is 68%, not 80%, but it is improving. And that says there's a little bit more strength to go. And it also says, what about crude oil? Well, crude oil at this particular point is just stuck in this trading range, just like bonds are stuck in a trading range. And the trading range suggests that there's a range of, it's at 45.33, a range of 46 to 48 as near-term resistance, and 43 to 42.50 as the support. And a break of either one of those says break above, says we can go retest those highs that we made recently of 48.42 is a crude oil continuous contract, and 49.33. Okay, MACD is good, stochastics okay. The weekly chart is not very good at all. Monthly chart is horrible. And so the question would be, how come we haven't shorted the IYT? You know, it's a funny thing. It was the perfect vehicle for shorting. For some reason, I only treated it as informational. And sometimes it's fine to do that, like GE, we don't often trade it. We treat it as information. What's GE doing today? Should be up a little bit. Can't find it, disappeared. There it is. It's up 17 cents at 24.72. So look, the IYT weekly is saying, I managed to hold the 200-period moving average in the weekly with that exact inside wedge Chapman wave down target line right there. And the stochastic gave a wonderful reading of positive divergence, and the MACD is trying to, but it's still stuck. So this is going to be very interesting. Can the IYT go to the 148s with the 9-period moving averages in the monthly chart? Well, it has to break that resistance, and that's how these things work. You want to go from the smaller time frames to the next bigger time frame to the to the next. So the 120-minute chart trying to tackle the 146.26 200-period moving average impacts the downtrend line of the daily. The daily then impacts the weekly because it's right on at this moment. It's right on the 90 EMA. And if it breaks above it, it says, hey, you can have another large arch formation. I'm still thinking arch formations rather than a V-shaped turnaround to the upside. But I am keeping in mind because there are just so many things going on. Oh, I've got Lou Nash on. Lou, how are you?
Fine, thank you. I'm just wondering
Yep.
where a good spot for the shorting the S&P.
Okay. Now, in this choppy formation, this right shoulder of the M pattern, the lowercase m pattern, makes it the most difficult thing to identify a short if you haven't picked off the exact high, because that's where your best risk reward is at 1992. So yeah, I got two suggestions. One is right at this moment, I know, Lou, that you like to get the position, you'd like to hold it a little bit, and you don't mind sitting back and watching. You'd like to hold it more than a few days. You'd like to hold it maybe even a couple of weeks. Sometimes that works, and in this market, that would be real difficult to do. So my suggestion here is that let this little bit of strength run out to the upside. My thinking here is that the high of the day is going to be very important at 1967.25. That's still another 17 points away. So I'm going to make the suggestion to you that you can do one of two things. The reason why I do see that the E-minis are going to retest the low of 3 days ago of 1915 is because of the pattern that I'm looking at. The big thing is that this whippy yo-yo action that I've been talking about can go on a little longer. I don't want to say to you, hey, Lou, you could short it, it's at 1950, short it at 1957. Why? Because if it actually gets to 1957, there's a real good chance that the magnet of 1970 at the 200-period moving average could actually drag it higher. Just because we've had so many sharp down moves that there are a lot of people saying, you know what, there's some things that I'd like to buy, and then when we start to fail, they say, oh, now you got a short. So this is a period where I would not say to you, short it now. If you've got patience and you can wait for it, there are two levels. One is, if there is a push today or early tomorrow that takes the E-minis above 1957 to 1959, then you've got to wait. And then what I would do is I'd say to you, at 1964 to 1965, that's where I'd be looking at it closely. But the best place is 1967. So it says you got to wait and maybe miss, quite a chunk. But if it can get to the 1965, 1967, I would suggest a short there. And if you're able to have a 6-point stop, I don't know what kind of stops you would have. I would have about a $6.50 stop, so that's 325 points. But in the meantime, if it fails, if today the E-mini suddenly starts to tackle 342 to 1942 to 1939, that says it's probably going to fail. That's real. Those are big differences. I'm not comfortable. Hey, can you hold on? I got to feel comfortable with the numbers I give you. So can you hold on?
Yeah.
Okay, good. I'll be back with Lou Nasher. Dow's up 63, S&P's up 8.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi folks, we're back. So what I did is a quick little drawing of the 10-minute chart to show the different levels. I don't like to make charts messy, but I needed to expand on this just so that we could be looking at the same thing. I'm going to recommend, Lou, that you wait for that isolated pop to the upside. And I've got a chart here that suggests that if 1952-54 is taken out, then we're going to go above leg to make. We'll start making leg C above 1956, and that would suggest there is a chance that we could get into the 1960 area. So I'm going to suggest, because of the risk to reward, this is not the time. In my show tomorrow, what is today? Thursday. Up in my show tomorrow, I'll probably do a little bit more work. I got a feeling that it might be Monday or so that you'd be looking at the short side again. There's some kind of strength here. So I hope you don't mind. I'm just going to say to you to short the E-minis right now. I think the risk reward is too great. I would much rather wait for a much better entry point, and that entry point based on the 10-minute and the 120-minute chart suggests closer to the 1965, 1970 area. That's where I'd probably start thinking of shorting. I hope that helps you.
Very good. Yes, it always does. Thank you.
Thank you very much for calling. So, folks, let me just elaborate quickly on what I'll be talking about tonight in the webinar. It's not tonight, 6 hours' time. And I've got a couple of things that I still have to do. So let me do this real quickly. The VIX index. The VIX index right now is trading at 2587. The pattern that we're looking at, look at this 120-minute chart. See that resistance says that if the VIX starts to push towards the 20, it's a 25.86. If it breaks into the 27s by later today or tomorrow, that suggests that this market will start to come down now. The way the pattern is formulating, it's saying, you know, I'm having trouble, I'm making these little arch formations, and then if I start, this is the VIX talking, if I start to pull back and I go underneath 25, that would say to fund managers, oh, you know what, not now, folks, this is not the time. And that will allow the market to go back again a little higher. And I think that the chop that we're looking at, really important to keep in mind. Why? Because when you're looking at something like the Dow is saying, I'm just in a trading range. I look bad when I'm going sharply lower. I look great when I'm sharply higher. But if you really look at me in the context of the weekly chart, this is nothing. This is just chop. So a chop means that you can lose a lot of money by being wrong many times, even though the market's gone nowhere. Let's wait for the trend. The next trend will be a sharp down move, but you've got to get the Dow a little higher before you can get that M-shaped pattern to formulate in such a way it says, now I'm ready to break down. So that's really what I'm talking about. And what I'll talk about tonight is the historical context and why this is different to other times in the volatility index and what is the implication. And that's tonight. I'll do it one more time because I know that there are people very interested in this. Here we go. This is the historical context of volatile markets, a live event, 6 o'clock tonight. You get my newsletter, 30 days free. I'll even discuss in the webinar how you can use the newsletter to your best advantage if you have little time, if you have a lot of time, if you don't even want to trade, you just want to know where the market's going and why. I think it's going to be great. Now look at this end of the summer Tiger dollar sale. 20%, 30%, 40%. Where in the market do you find a quick 20 to 30 to 40%, huh? This is a great opportunity. Try to get in tonight. Subscribe to the event only, but you can come in by just joining for a month, a free trial, and it's the historical context of the volatility index. So let me move this away now, and here's the last thing I wanted to say. What's today? Thursday? Oh, Daryl Martin. Yep, you've got Daryl coming in. Great shows all the way through this afternoon. You've got Andy Heck wraps us up after Tom O'Brien. You've got Dave White. You've got Steve Rhodes. Wait a minute. 12 o'clock? 1 o'clock, Steve Rhodes. Oh, there are programs all day. Should be a wonderful rest of the day. So I hope to see a lot of you at 6 p.m. And thank you. I'll be back with Tom a little later on.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.